We have with us Anand Shah, the head PMS and AIF investments at ICICI Prudential AMC, joining in on the show right now. Anand, hi, morning. Great to have you today on ET Now. Anand, what's the take on the market? I mean, there's such a dichotomy between the opinion now on what the mid and small caps are up to and what the large caps are doing, right? First, let's start off with the large cap universe. You think good to go for more headroom, the market at an index level, or do you think that's also getting a little bit overheated?
And all the viewers, I think, look, the difference, while we internally say that the values are at new high, the valuations are not. When I'm saying in the context that when you compare today's market with, say, October 2021, I think while the levels might be similar or a little higher than that, the earnings have significantly improved. So I think the key difference this time around when the markets are touching new highs versus the times when you generally worry is actually the markets are chasing earnings this time around. So we have had a very solid last 3 years in terms of earnings growth rate, obviously with some hiccups here and there in some segments of the market, but otherwise, all in all, at the Nifty level also, the earnings have been supportive of the market to continue to inch up. Having said that, I think we have seen a very, very sharp rally in the markets on the back of both domestic and global liquidity. So it is very, very prudent to say that while the earnings are strong and to that extent fundamentals support it, but the risks reward are not as favorable as they were in last 2 to 3 years. So to that extent, one needs to be careful of what one is buying. And rightly, you said large caps today looks a little much relatively safer than mid and small cap, where the rally has been much sharper.
What is stopping you from, let's say, raising cash, sitting on sitting on cash levels where you will get an advantage if markets go down?
Sorry, I missed the initial part.
No, what is stopping, if your view on the market is not that great, whether it's large cap or mid cap, what is stopping you from sitting on high cash levels so that you could benefit if markets go down?
Yeah, I think good point. And the point being that, as I said, the fundamentals are supportive. And when you're picking up companies, you're picking up stocks, there are enough and more opportunities. So the question is it the levels where we are not finding ideas? Is that the levels where we need to significantly raise cash in the portfolios? No, that is not the point. As we were discussing a while back in this channel itself, that the banking still looks very, very comfortable in terms of valuations. Certain utilities still look comfortable. Even to some extent, autos and IT is also corrected. So to me, overall, on the valuations front, we are still finding select opportunities. So to that extent, it's not an overheated market. So again, repeat, while the values are at new high, the valuations are not. So it's not that concerning that I need to raise significant cash in the portfolio at this point.
One of the theses you follow is that buy companies which are going through temporary headwinds, buy sector right now where there is, in general, the mood is bearish. Where are you finding this combination of under ownership, a temporary disruption, and perhaps attractive valuations?
So again, when we are at the markets are at the new high, yes, there is general optimism across the economy. So when I'm talking that relatively where the perception of the market is different from the reality. So we keep on looking where ideally there should be earnings surprise as market is. So again, coming back, I think telecom is one segment where there has been a significant consolidation. Last 10 years have been struggle in making money, but I think we have reached a point where the industry is fairly consolidated. So we should see surprises there in terms of pricing uptick. And again, not in next 3 months or next 6 months, but as we go ahead over next few years, you will see more pricing uptick, better cash flows in these businesses. Similarly, banking is also, since the AQR in 2015 has come a long way. So we had asset quality review, you had Demon, GST, RERA, NBFC crisis. The banks have provided for that. And it got stress tested, really stress tested both in SME and retail during the COVID wave 1 and COVID wave 2. So I think banks are also coming out of a very long, painful period. And there also, we are seeing now a twin-fold advantage of one, significantly lower incremental slippages, but also recoveries from the past slippages. So there also the credit cost seems to be benign, and that's also supportive of the banks looking at. So yes, there are enough and more opportunities there. The perception and the reality, there is a good gap, and that's what we can capture.
Right. Anand, I want to specifically talk about manufacturing, right? Because that seems to be the go-to story when it comes to India. And in particular about aerospace, defense, railways. Does it seem like these pockets are getting overheated?
Indeed, this is another area where, again, the perception reality gap was very high 3 years back. Our portfolios were overweight manufacturing and manufacturing allied businesses for last 3 years, while we are significantly underweight consumer. There has been a decent re-rating in this segment. People are warming up to the opportunities that exist in manufacturing. Rightly so, people were not interested 3 years back because we had, prior to that, a decade when manufacturing really struggled in this country. I think many efforts been made from Atmanirbhar to PLI, and also the balance sheets have strengthened a lot. On top of it, recovery in domestic consumption, but also the exports opportunities in the form of China plus one, Europe plus one is also playing out in specific companies and sectors. So manufacturing is a very, very wide segment. We are again looking at multiple sectors and multiple companies. One of the reasons why we're seeing a much more interest in mid cap and small cap, because in India, the large caps have very little manufacturing. A lot of large cap companies are banking services, IT services, pharmaceuticals. Autos are again consumer facing autos and consumer businesses. A lot of real manufacturing is sitting in mid cap and small cap, and that's why we are seeing more and more excitement in that segment of the
Where do you think this entire volatility of the election cycle would kick in? Today we are not talking about it, but soon we'll start talking about it. Historically, we've seen that the election cycle in India is always a swing event. It's not a binary event, but it's a swing event. What should one do?
I think our experience of last 20, 23 years that I've been in the market and what we have learned is, I think, notwithstanding the macro risks that exist always in the market, I think focusing on stock picking, focusing on identifying right businesses has actually paid off very well. To be very honest, many of macro risks were much bigger, had a much larger impact than elections, be it global financial crisis, be it more recently COVID. I think there would always be external forces which will push down markets, and one needs to be cognizant of that. And that's why the asset allocation of an individual is very important. But sticking to the basics, sticking to the right businesses who can withstand the volatility, both macro and micro, and then come out winner out of it. So we have seen even in this cycle, it's not very, very, what would I say, symmetric up move in the market. We have seen significant divergence. We have seen manufacturing, which has survived, has done extremely well, whereas many consumer-facing businesses have not created any wealth because they were fully priced and they're actually at the receiving end of a very high inflation. So very clearly sticking to the basics, identifying good businesses run by decent management and at the right valuations. BMV is what we call it, business management valuation, that will work. And something which is a macro-led volatility is, I think, something one needs to be mentally prepared for and has to factoring in one's asset allocation.
Led volatility. And Anand, morning, just to stretch that point a little bit further, we were discussing earlier this morning how the undertone of the market, despite the bumps along the way, does seem to remain positive by and large. Do you believe that it is only if we do see some sort of a major event globally that's quite negative, that would really alter the course for our own markets, and otherwise we are looking to build up on the momentum that we're currently seeing?
I think very good question. I think this is very, very important question that do we see this market rally as one of those, sentiment driven rallies or a flow driven rallies and should sell off? I think that's clearly no. I think after a very long period of time, we have many elements getting aligned. While the Indian consumer story is not lost to anybody, Indian consumer has been doing well for last couple of decades. You have a large middle class population where the dependency ratio is falling, per capita income is rising. So obviously Indian consumer story is not going anywhere. Notwithstanding, there are some rich valuations and reasonable expectations from those companies which are causing some pain in those stocks. But the Indian consumer story is not lost. I think the new story over last few years, where is a significant focus on manufacturing. That was the missing link. I think that's also now at a verge of even the private sector capex. We had many of false starts, but looks like at last, led by government capex, we will see some crowding in of the private sector capex also. So if I see broadly, I think today more number of businesses in India are doing well than less, which was not the case prior to 2020 when a very significant part of the economy, which was manufacturing allied, was struggling as China was the factory for the world and was exporting deflation into the world, which made manufacturing very difficult business to be in. I think that's changing. So to summarize, I think this is the market which has strong legs of earnings. One is to be very, very focused. One is to be very, very careful and continue to, buy the right businesses which will benefit from a multi-year growth, which is a possibility, very clear possibility as the stars are aligned today.
Anand, such a pleasure having you on the show today. Thank you so much for taking the time out and sharing with us your opinion on the markets.
Thanks for having me.
Okay, let me just